Says we're live on Facebook now in my top corner.
Awesome. So 6 time is a charm. And there we go. So 6 time is a charm for sure. So we are going to go ahead and get started right now in our 4th episode of the Agents Roundtable with my very special guest, my business partner, my friend, my cohort, Mr. Mike Shless, co-founder of Freedom Financial Solutions out of Charlotte, North Carolina. Mike, how are you today?
Appreciate Good morning. Good morning. 6 times a charm, but it's kind of like, if it was easy, I guess everyone would do it, right?
That's right. You know, most people don't even take the risk on going live. We tried it 5 times and then had some real awkward conversations on Facebook Live while everybody was watching, and most people would have just thrown in the towel, but not us.
It's funny. We just weren't giving up. I mean, we actually called each other on a cell phone to see what's going on. I'm like, we're not giving up. We're not going to quit. We're gonna see this through and figure out how to make it happen. And kind of ironic because it's what I see in our best agents. They make it happen. They figure out a way. They use the system. So we have to lead from the front that way. As simple as a Facebook Live, we got to make sure we get it done and we go through the process.
Correct. And so, one of the things that I wanted to do in this episode, which was maybe different than some of the other episodes, and you've been you've had a chance to watch some of the replays and be in some of the lives that we've done with previous guests who were from different industries. Everybody that we've had on so far came from different industries. They were an expert in their particular industry, had success stories. A lot of them, they all had the same similar conversation where they had roadblocks, which prevented them from having, that immediate success, that overnight success. In my experience, it happens to the very few. There's typically something that happens throughout your career that like we were talking about right now, that has you stay in the game, but then also makes you appreciate the success that you have later on down the road.
Mm-hmm. Absolutely.
And so what I'd like to do is maybe just have you tell everybody, because this is going to go actually live on our personal pages, but then it's also being shared in our group that has over 350 members in it as of today. And so maybe take us back to Mike Shless pre-financial services. What did that career look like? And who were you at that point?
So when I was in college, I was about to graduate and I was looking at some different sales jobs, and it was my sister's, Lori's boyfriend. His name was Rick. His dad was like, you gotta sell commercial printing. You gotta sell commercial printing. And I spent a couple days in that facility, and I wanted to see from start to finish, like kind of like be able to see what they do. And what I decided was I really wanted to sell commercial printing. I just didn't know if that was the right environment for me. So I decided I wanted to interview. And the first position I ever got was a company called Vogue Printers. Pete is actually a Facebook friend of mine and was probably one of the most nurturing, helping, setting proper expectations. First sales job I can ever have. And he's still a friend of mine. A matter of fact, they were thoughts of somebody's business a few years ago. And he called me up and said, his partner said, I named 2 people that could buy the business and you were one of them. And I was flattered, but we had a thriving financial services business. So it wasn't an option. And there was no way I was moving back to the cold in Chicago. But what they taught me.
It is cold in Chicago. Not to interrupt you. It is super cold in Chicago.
Yeah. And snowy. But what I learned about it was the energy and the effort it takes to start a sales job. Mm-hmm. So the amount of hours it took, the hunger you have to have. I mean, you need to be able to literally dive in. I had to be in the office at 6 a.m. and I didn't finish till 6 p.m. when I started in printing for years. And it was because I had to get that flywheel going. I had to get the client base going. I knew I had to call on a ton of customers. I was new to the business and the big fish were taken. So I had to cultivate a client base and try to add a big fish to make a great living. And it was a great experience. And I kind of outgrew that facility and I switched to another company, which was a company called Consolidated Graphics, which was owned by R.R. Donnelly. And I actually was out of a 10-year period with that company. I was number one year, but I was always in the top 3 nationally. with that company, but it took that same work ethic. It was being there first thing in the morning when my jobs had to go on a printing press. I would view them to make sure they were proper because I didn't want to not be there. I didn't want something to go wrong and my client to get a mistake. So I put my eyeballs on everything. It was just that extra effort. And I learned early on that when you take on a client in the printing business, or when I started getting into the mortgage business, when you take a client's project on, you're taking their paycheck and their mortgage on your shoulder. Because if you mess it up, they could lose their job. And I took that real seriously early on. And that's something Pete taught me, and I take it to this day. So when we bring on an agent today, we are responsible for their mortgage payment, their car payment, their college education, everything about them. And you have to lead that way. And so that was early on. But it taught me how to do direct mail. It taught me how to do data mining. It taught me how to do variable data, how post office works. Because my biggest client was a company called the Pampered Chef. That turned out to be my big fish. And we mailed to every sales agent they had nationally once a month. And we got it done start to finish in like 5 business days, which we kept the job. Matter of fact, the company when I left kept that job, I think, up until maybe a couple of years ago when the internet's taken over. They're still doing a newsletter. It's smaller. They're still doing it. It's just at a much smaller scale.
Got it. Right. So you had this background in printing. You learned the innuendos, the ins, the outs. You talked about learning how the post office worked and all that great stuff. And then you actually found yourself in a career making, if I don't want to, quote you, but put words in your mouth, but I know at one point you were making well over $700,000 a year working in the financial industry. Is that correct?
Correct. So then we moved from North Carolina, or from Chicago to North Carolina, and I made a career change. Colleen's best friend owned one of the largest subprime lenders. He founded it. It was called New Century out in California, and he wanted me to come work for him. And I kind of felt uncomfortable working for a friend, having no experience, and I was a little nervous about maybe not being able to do it. And so I went to a competitor first and said, hey, let me get my feet wet over here. If I get a lot of success, then you could bring me on. And he was cool with that. And I went to a company called Novastar, and had a manager named Luke Sampson, who by far in a sales position where a daily manager, this guy gave me a ton of freedom, gave me great advice, was a great coach or mentor, great in self-development. And he helped me go from having no client base, not knowing anything in the business, to being one of the top 3 salespeople by units, meaning closed loans in the country. And I gave Luke Sampson the reason why we started making that $700,000 a year, because we had a mentor like that helped and really taught me a business I didn't understand. I can remember the first appointment I went to, and somebody asked me if I could do 100% CLT, which was, you're basically your first and second loan combined loan to value. But I had just moved from Chicago, and I thought you were talking about Chicagoland TV station. It was called CLTV. And I'm like, I got to leave for a second. So I went out in my car and I called him, and he started laughing. He goes, no, we don't do that, but this is what they're telling you. And so I went back in, and the guy told me, I'll never forget, he said, you didn't know what that was, did you? And I'm like, no. He goes, you'll never make it in this business. And it turned out to be a really big client of mine down the road. So, and then we saw the industry implode. I went to my 20-year high school reunion in 2008, 20 years. And this kid, Matt, I was friends with him in junior high. He's a big shot attorney. And he's like, what do you do? And I said, I do mortgages on the brokerage side. We sell to brokers and lenders. And he said, no. You used to do mortgages. And he was right. I was a dinosaur in a snowstorm. I was going to die. I knew I was going to die. I just didn't know when I was going to die. But the writing was on the wall that I was freezing eventually, because that industry is just went. So all these lenders closed up. I had 9 companies close up on me in 1 year. And the last place I found myself was a division of Goldman Sachs, of Elo Mortgage. And we were going to revitalize the subprime, and we were going to do securitizations. Well, anyways, long story short, we all know what happened at Goldman Sachs on buying and selling. You can't do that. And so they got in trouble, and they wound up shutting our division down. And I went and I worked for a company called First Financial here in Charlotte. And I helped run their branching division. And one day on my desk was I can't say what I saw other than the fact that a big MLN was selling off a good chunk of itself. And it was so much money that I'm like, I need to get in the life insurance business. I need to figure out a way to get in the financial services business. I saw what this was. I saw what this company was going for. And literally coincidentally, a friend of mine from the mortgage business called me up and said, hey, it was like literally within 48 hours. So it's like, imagine how the world works. He's like, hey, I got a sales opportunity for you. It's with this company and it's selling life insurance part-time. And I'm like, I'm in. So I met this guy that was the manager and he wrote a cocktail napkin. I think we actually still have it. And he drew all these circles and squares and I was going to be rich. And I went and got his insurance license on a Friday afternoon. I locked myself in a room in my house. I scheduled my test, took it on the Wednesday the next week. I got through the class that fast and I made my first sale by the following Friday. Because in North Carolina, when you got your passed your test, you get your insurance card and they'd hand it to you, it had your photo on it and you were good to go. And I remember
not like Pennsylvania.
There's no state really like that anymore now with the background checks and stuff. But I'll never forget, I would go to these boot camps, and this first boot camp I went to, I ignored everything. I was kind of like Joe Germano when he tells that story.
Oh yeah.
Second boot camp, I brought Colleen with me. I also brought Zach to the first boot camp. But I'll never forget sitting there with Colleen, and there was a kid who sold like 28 sales in a row, and he was like probably a 22-year-old kid. I don't remember exactly his name. And I was 50% that whole month. So I maybe in my first month sold 6,000 in premium, and I was all excited about that. And but this kid did in the same amount of appointments I did, you know, he would have sold all of them. He would have probably done 12. And Colleen leaned over with me and she goes, you're wasting our time. You better start taking notes. And that was our second boot camp. And from that point on, I took the training really, really seriously because I realized the value of time. I needed to get my ego out of the way. So that's kind of my intro to financial services and the path of getting there. You know, I wouldn't, if I were to do it all over again, I probably wouldn't do it much differently. You know, we've had some bumps. We had some really down times. We went to a really tough, lawsuit. I don't think that made me, if I would have skipped any of that through the getting started in the business, I don't think we'd be where we are because we might not treat agents the way we treat them.
Right. Yeah. It's interesting because your story is fascinating because you started out in an area of your life working, in a print shop and learning that God has interesting ways on how he works. And one thing was literally a plan to set you up for another thing. And then obviously the print shop has nothing to do with working at Goldman Sachs, right? The two have absolutely nothing to do with each other, but yet look how there was an implosion in 2008. You saw the writing on the wall and you weren't thinking about insurance. It was just so happened that someone had mentioned it to you. And then all of a sudden something clicked during your first year or two while working in the insurance. And again, this is not about me. This is about you today. But for me, something clicked that second year, that third year, when I started looking around at all the other companies and watching what all the other companies in our space, what they were doing and how they were doing the mail, what their products were like, their system, their training, their integrity, their character. And something clicked with me. What was it that clicked with you that made you say from that first company where you got introduced to insurance that all of a sudden you said, you know what, I'm going to do this myself?
I didn't fit in. I just didn't feel like it was client first. It was more about recruiting and more about that. And I knew you can build a team and recruit, but I really felt that first client was so important. And again, when I hired an agent, I didn't feel like I didn't feel confident, me in that system that I could really put their mortgage payment, their car payment on my shoulder forever. And so we started looking at another venue and I went to another place and it was heavy in final expense, but I had a contract with them and I wrote that I could do my own IMO underneath them. I could go off and branch out. I would do my final expense with them. But as I grew my financial services business, they would just get that final expense part. And what final expenses is really telling seniors a $15,000, $20,000, $30,000 policy to pay their final expenses. And usually the people don't have a lot of money. And I didn't feel like as a professional, I mean, it's a needed business, but I felt like it's also the quality of the end agent wasn't quite the end client wasn't the same. And when I got in this business, I wanted to come off work like this, dress like this, and feel comfortable that I was going to a like person, someone who could afford a mortgage and a home and everything. And so when we got to that final expense realm, I felt like we had taken a step back And we quite honestly took a huge hit. We lost a ton of agents at that point because they were all used to going into homes like yours. I mean, you have a beautiful home, looking at the pillars and stuff. You were my client. And how could I go from that to a mobile home with a hole in the floor with literally grass growing up in it, or a guy answering his door that doesn't even put a shirt on every day because he doesn't need to go to work because he's on disability. And so it was a big switch in client base, and it just wasn't a fit in that aspect. And I didn't like the way that second company really treated, because like they would say they had new leads and they would sell them a couple times and say they were new, even though that you'd have two agents from them going to the same home at the same time, and they both sold them as new leads. And I'm like, so that was broken. And I just knew at that point, the only way we're gonna do it is to 100%. We started getting direct contracts. We started having the volume. We're a minority-owned business. Colleen owns us for that reason. And a couple carriers on that second company, they had some issues. Some guys left, and there were some legal issues. I don't know the whole ins and out, but a whole bunch of carriers let us move direct to them. And it was just a dumb luck incident, which kind of blasted us. And then we got some help from Phoenix Life. We were the first person to launch their simple issue product that used to go to $1 million. We launched that for the first company in America to launch that through BIF. And that just gave us kind of a spark to get going. But if you ask for a pivotal moment, it was really, I read a book, Grinding It Out by Ray Kroc. And he talked about how long it took to build McDonald's to have the success that they have today, and how long it took him before he ever took a dime out. And most people don't realize this, but Ray Kroc never took money out of the company for 7 years. So he basically lived on, today we would call it ramen noodles, and rice and beans. And he did that to make sure that it got to where McDonald's was today. And McDonald's isn't a burger company, it's a land company and a management company. People don't realize that. If you read the book, you realize.
Largest holder of real estate in the country.
Yes. And people don't realize what the vision was really. And it was not Ray Kroc had the burger vision. He brought in somebody else with the financial vision, which made McDonald's what it is today. And it is a great franchise, probably one of the best if you can afford it to have. I would not give up financial services for McDonald's franchise, to be honest with you, knowing the numbers. But we just knew that if we put agents first and clients first always, and we gave up a little money on the front end and we reinvested in our agents and our business. So in the beginning, I knew I had to get a Brett Grossman to make a lot of money and for proof of concept. And I knew that I might have to make a little money in the beginning. And I knew in the beginning, my agents might actually make more money than me net, because I had to put so much money back into business to grow it. And I was willing to live really lean for a lot of years to get to a tipping point to where my income really jumped. But I knew it all came through client first. And what I mean by that is your client as an agent. You go out to the client and you give them the best possible product, regardless of commission. And then I knew that I also had to make sure that you made really good money, and that I didn't charge you crazy fees, and I didn't make you pay for lead overrides. And I didn't do all these things that were putting the company before everybody else. And yeah, I had to make a little less money to do it. That's why we don't charge for training. We had a carrier that came out to the meeting that we had, and he saw 150 people in the room, and he's like, you could have charged $100 for everybody and you made a lot of money. And I'm like, but we're not in the business for that. We're in the business to help someone get really financially free. And if I put an expense on them, how can they make financially free? And I'm going to tell you, like Shark Tank. One of the things you ever hear about the royalty deal, all the other sharks don't like the royalty deal with Mr. Wonderful, because that royalty deal is taking money away from the business off each sale to stick in the guy's pocket. And by putting all these fees and services, just like me giving you a royalty deal, it's kind of like a head fake, where I'm telling you you're going to make all this money, but I'm going to charge you back on a royalty fee over here, so I make a little extra money. And we weren't willing to do that. We are willing to make a little less money now to grow something special. And that's why when people say, when we come to your trainings, we always see the same people. It's growing every time, but it's the same people. There's a reason for that, because we don't have a revolving door.
No.
An analogy that it came from, I saw Chris Gardner speak, and he talked about foundation. And so he talked about when he found, it was a financial company, Dean Witter, I think. He met a guy from Dean Witter. Yeah. And he was basically selling those machines that were going to be no good anymore. Those, I don't know, like some kind of testing machine. He had like 7 left to sell, and he was out. And he met this guy who was very, very wealthy, and he did really, really well. And one of the things he said was he knew he had a choice to be jealous and mad because he was basically going to be homeless, or he could figure out what that guy did and just do it as good or better. And he would eventually be in that position. And, but what he said about foundation was he knew he had to build a foundation, a structural foundation on himself to get to the next level. So the deeper the foundation he could build, the higher his wealth could be. And it's like a building. If you see the largest building in your city, and let's say it's 100 stories, it says 100-story building in your city, they've got that building going down 20 to 25 stories to give it that support. If you don't treat your career the same way and you don't have that foundation, you're limiting your growth. And so, and what I needed to do is I needed to build that corporate foundation in depth to build the strength for you guys to flourish. And that was, and we had to take some risks, and we literally, we didn't make money for a period of time, and our agents made money. I'll never forget when we started making money, an agent, Keith, he said, you drive a Hyundai. I know you're making money now. Would you buy a nicer car? Because we feel like you're all poor. And I'm like, I was so conservative. I just didn't want to do it. And Colleen's like, you know what? He's right. Let's just get a nice car. And that was the first time we bought a Porsche. And I was embarrassed when I got it. I didn't want to show it off. And my agents were sticking it on Facebook and taking pictures with it. And coming by when I was there, they were wanting to sit and take pictures. And I guess having a dream board is important, and putting something on your dream board and getting it is great. But I didn't feel like I wanted to rub it in anybody's face, because if my expenses are so high that I have to take from you to have expenses, then I need to rethink that. So if I were to, let's say, go buy a $2 million or $3 million home tomorrow, which we can afford, and then the industry slowed and I had to put something on you to help cover my expenses, I could probably get away with it, but it wouldn't be fair to you. You know what I mean? So I think that I need to make sure that you guys flourish and have the lifestyle. I want everyone, we had I think 6 different people get new homes last year. Joe Germano's home is like a mansion. I mean, having an agent personal production know he's going to make over $700,000 in a year is crazy. To have a guy got
and again to be clear, that's off his own pen, and he's probably taking 5 leads a week.
Not even right now.
Not even 5 leads a week.
So
now, obviously, we're not going to give away our secrets here on a Facebook Live Zoom. We're not going to give away our secrets. We have a private corporate group page for that, and then we actually have our trainings where we give away our secrets. But this is real stuff here, and you've brought up so many good points. One of the things that I want to talk about is I get recruited every single day, and I get insurance agents hitting me up on Facebook and friend requesting me. And I'm like, sure, because eventually, we're going to be working together. I just won't be where you are. It's going to be the other way around. And so, it's interesting because, and I'll use your words, quote for quote, that you had said to me yesterday when I was at the gym. You had said, Brett, you had one of the worst experiences of anybody I've ever met in my whole career in the insurance business. And it's not about my story today. It's not about what had happened to me 2 years ago, or it was actually longer now than 2 years ago. It was actually 2.5 years ago. But the fact is that I obviously put a microscope on you during those first couple months, because my trust level, and I believe that I have a pretty decent reputation in the industry. My relationships right now with guys like Biff and Lindsay and some of the insurance carriers and some of the upper level management individuals in these insurance carriers, these A-rated type companies, the relationship continues to grow and get better. My point is that I was so unsure and so untrustworthy, I could not trust anyone at that point in my life. And yet, I was willing to give it one more shot. I was willing to say, this is going to be the last hurrah. And if it doesn't work here, I'll go figure something else out. We'll figure something else out here. It's a testament to you, because there were certain things that I was looking for in a mentor and a coach and as a business owner that I felt was a makeup of me. I was kind of looking for that reflection. So I was looking for someone who was a family man, someone who was happily married, not just married, but happily married, someone who didn't have all the flash and didn't have all the rah-rah and didn't need, real special type training, someone who was just interested in running lean, but running profitable. Someone who could take my business and myself, my skill level in the sales area of selling insurance. And I understood IULs. I understood index annuity. Like, I understood some of these products, but I had never really dove into it because I was scared and I was nervous that I would mess it up. So I stayed with what I knew, which was the sale of insurance and going into people's home and businesses and helping people in that fashion, which again, look, Joe Germano will make a ton of, we've got, so many people doing so well for themselves just on the sale of insurance, but then, entering into other areas of insurance. And that's what I was looking for. And that's what I found with you. And but it didn't happen overnight. It took time, and it took, you came out to Philadelphia that one September. And I think maybe, for that first training that I put together, I think maybe there was 12 or 13 people in the room, and then eventually, it began to grow and began to grow. And one of the cool things, and you mentioned this also, was our turnover rate. In the last 2.5 years, I think there's been 2 people that have been contracted and have worked with our group specifically who are no longer working with this. And I can say unequivocally, I have no ego. I'm very humbled, but it had nothing to do with our training, or it had nothing to do with our process or our system. Sometimes insurance may not be a good fit for some people. And I think that was just, where they fell in. One of the things that you've been able to do consistently is reinvent the company. When I see all these other companies